Hey guys, welcome back to the channel McNallie Money, the official home of power analysis. The Bitcoin mining sector has long been known for speculation and volatility. Fast forward to today where we move into the HPC AI sector and we're starting to see a lot of speculation in the space. We're going to be dissecting these topics in today's video, talking about the rumor mill that really has become the AI HPC sector. Before we get into it, take a second, smash the like button guys, big help to myself and the channel. Anthony absolutely loves it. If you're not already subscribed, McNallie Money, feel free to join and let us know in the comment section below how you're feeling about the HPC AI space and your top pick in the sector. With that being said, let's get into today's video. Okay guys, Monday afternoon, away we go. This is an exciting week ahead of us. We're expecting a lot of volatility. There's been some big rumors circulating around social media in relation to the sector, and we thought it would be high time we discuss this in a proper podcast, talking about the volatility, the speculation, what's been priced in, and some of the rumors we've seen during our time in the space. So Anthony, a lot to talk about. Before we do though, Bitcoin hovering in that $91,000, $92,000 range. We tried to update the slide to get it closer to 92. It dropped back to 91. I don't know what we're supposed to do here.
Yeah, it's a bit volatile on a Monday. It was obviously the weekend was fairly flat all through Saturday and Sunday, but you can see from your 5-day chart there, the last part of that period is obviously from early Monday morning through to where we are now, and we've seen it hit above 92, immediately dropping back down to 90 and back up to 92. And probably by the end of the podcast, it'll be back down to 90 again, Bryce. So just having a bit of a volatile day. And if you look at the Bitcoin miners, we're having a green day there. And if you look at where we are from the day range, we're probably close to the highs of the day. IREN leading the day range at the moment, and we'll talk a lot more about IREN during the podcast. But DMG having a good day. Hive, Mara, Cipher. In fact, we could go down the whole list. Soluna's flat today at the moment there. And the volumes aren't particularly high, apart from IREN's. IREN's already at 30 million shares traded in the first couple of hours. Average volume for IREN, 37 million. So we're heading to its average in the first sort of 2.5 hours of the day. However, you look at the 52-week range for IREN there, still got a bit of way to go. 76.87 was probably the closing price of the highest, although I do think it hit $80 intraday there. So certainly got a bit of a way to go, another $30 to get into there. But we'll talk more and more about IREN as we go through. But yeah, a reasonably good day for miners. Bitcoin, as I say, a bit volatile. Another day in Bitcoin land.
Certainly is, yeah. And we did have some buying in terms of Bitcoin over the weekend. You can see Saylor purchased another 13,627 Bitcoin, getting them up close to 700,000 Bitcoin. Texas as well, buying their second tranche, another $5 million worth of IBIT, so bringing their Bitcoin hodl up to $10 million worth of Bitcoin equivalent under their strategic reserve. And Jerome Powell at the Fed continuing to inject money, quantitative easing, another $100 billion put into bonds last week. So we're starting to see some of those macro tailwinds, really positive news building on what we heard throughout 2025 as well. Now, as we pivot over to the miners, you quite rightly say a green day across the board. We covered the story from ABTC last week about them moving up the ranks in terms of overall Bitcoin hodl and this Satoshi per share metric. You've done some of your handiwork here, Anthony, taking this a step further. Satoshis per share, along with the Satoshi per $1 investment for the miners we cover, allowing kind of that apple-to-apple comparison.
Yeah, and this is a metric that ABTC are wanting to follow themselves as they grow their Bitcoin hodl. They'll see their increase in effectively sats per share. At the moment, we can see here 585 sats per share based on a hodl of just over 5,427 Bitcoin. They've got to that very, very quickly. They're actually, I think, in about 18th in the list of public companies with Bitcoin on the balance sheet. and the holding company Hut 8, they're actually in the top 10. So amazing to see two parts of the same company in the top 20, and the hodl certainly becoming more apparent for ABTC as we see that. Mara itself have the largest sats per share, but bear in mind, you've got to remember Mara's hodl is 54,000 Bitcoin. And so this is really going to, to play into those that have got a large Bitcoin and obviously, the shares. It doesn't really give you a comparison against each other. We've actually pulled up another effective graph to show you how you can sort of do more of a comparison, and that's the sats per dollar invested. So, for every dollar you invest in a company, how much are you getting in the case of sats return? And this particular instance, yes, Mara does come out of that one quite well, actually. DMG, if you compare DMG to the previous chart, DMG, because it's a smaller mining company with a lower amount of Bitcoin, but in proportion to their market cap, quite significant, and the amount of shares quite significant, you can see actually only 198 sats per share. But when you look at the dollar invested there, it comes out in second place, 948 sats per dollar invested. So that's where you start to see a real comparison. And then working all the way down there, we've got quite a few in the sort of like CleanSpark, ABTC, FuFu. ABTC, in a high position there in terms of sats per dollar invested. That's 323 for them, all the way down to Bit Zero with 13 sats per dollar invested in Bit Zero. So it's just another way of looking at it. I've also included the hodl versus market capitalization. People like to see that as well, and that actually should really mirror the sats per dollar invested there. The hodl over market cap, Mara's at the top there. We will put out this week. We'll show you again the enterprise value as well, just to show you the difference there. We included it in last week's charts. But believe you me, I'll put out the debt figures for these companies, and people who think that Mara's debt would have a significant impact, it doesn't really have that much of an impact whatsoever. Their debt is quite large, but they are a large company and they have a large amount of assets and a large amount of Bitcoin that's able to pay off that debt with ease. So they still perform quite well. They're certainly in the top three when you look at that for that particular perspective. So I know people have criticised saying using market capitalization, use enterprise value. It doesn't change things that much, to be honest with you.
No, and I recall that was a nice episode in terms of breaking that down. Now, for those of you who are curious, $1 US converts to 1,097 sats during today's podcast. So that gives you a frame of reference if you were to just go out and buy Bitcoin yourself. Now, it's interesting. We talk about the evolution of the Bitcoin mining space and all of the hearsay, the FUD over the years, the concerns, and I guess the rumors really that started this sector in maybe a bad light. We had talked a lot about the energy dominance that Bitcoin mining takes, how energy intensive this is, how they were using fossil fuels. That all turned out to be debunked. So that was one example of this fear, uncertainty, doubt, or the rumor mill in the Bitcoin mining world. Now we've pivoted over to HPC AI. I remember DeepSeek. There's been some FUD along the way, but we're getting to a point now, Anthony, where there's so much speculation. There's so many people doing their own research. These companies have such large portfolios of sites, some of them disclosed, some of them not. We're seeing a lot of speculation, a lot of rumor mill activity, so to speak, in the AI HPC sector now as well.
We are, and part of that is because we saw so many deals in the last quarter of 2025. I mean, we attended the conference, the HC Wainwright conference in September in New York. And at that point in time, only the likes of Core Scientific and TeraWulf had announced any deals. And there was speculation that there would be other deals from other miners. But really, that towards the end of 2025 itself, literally as we came away from that conference, probably the following week, we started to see a lot of announcements, and they continued all the way to the end of the year. So there is a build-up of speculation. One thing the miners have that all these hyperscalers and neoclouds looking for is power available. And the majority of this power is at sort of like really good power prices as well. And that's sort of 4, 5 cents a kilowatt hour. Now we know that the sensitivity of power for HPC is not as sensitive as to Bitcoin mining. Remember, if you're at 5 cents a kilowatt hour and you've only got an average efficiency, it's very hard to make any margin to cover the remaining costs other than your energy costs. It's quite challenging. But having a 5 cents per kilowatt hour to deliver HPC is a whole different ball game. It's not as sensitive, there's not as much power used, and it doesn't eat into your margins as much. And so that's why you can see, we can now say effectively all the mining companies are starting or have started to pivot already. Even the likes of CleanSpark, who purchased a site in Texas, the likes of Mara, who are effectively about to purchase a stake in a company called Exeon, who's a subsidiary of EDF. That's a French energy company that operates in Europe and operates in my neck of the woods in the UK as well. And so, these two were probably the last two of the biggest miners to start pivoting. They could see, obviously, what was happening with all the other miners, the deals that were being announced with great ease. And bear in mind, where we heard, certain CEOs say we'll expect a deal by the end of the year, they weren't announcing one deal, they were announcing 2 or 3 deals. And so the anticipation is we're in Q1 of 2026 now. What's going to happen in this quarter and the next quarter as we go further into the year, as we see this requirement for power become more and more essential. That's the bottleneck. Before it was about things like chips or maybe construction. If everyone's trying to construct at the same time, how are you going to get the necessary expertise? It's none of that. It's really about who's got the power. And one thing we know is the miners have got the power.
They certainly do. So that really sets the stage. You're right. There's a lot of excitement, a lot of eyeballs on this space. It's big dollars, big contracts. That's really leading into this speculative environment. Now, Small Cap Sniper posted an interesting clip. We just talked about visiting the HC Wainwright conference. This is from another conference about a year ago with Jeff Bezos from Amazon, and we'll play a short intro. It's about a 2-minute clip. I'd encourage you guys to go in and take a listen. But he really relates AI, data center capacity, HPC to what he saw at a brewery in Belgium, a 300-year-old brewery that had to make their own power. So we'll play the intro to the clip and then we can dissect it a bit.
What is it that you're doing at Amazon?
AI.
AI.
Yeah, so there are a few things, but small thing, but it's 95% AI.
And where do you think...
It's just so because we are literally working on 1,000 applications internally. So AI, you have to remember, modern AI is a horizontal enabling layer. It can be used to improve everything. It will be in everything.
Now, Jeff goes on to say, not only is this a horizontal layer, which we anticipate as well, Anthony, AI is going to be integrated into everything. That's why we expect the demand to be so high. But he also talks about the fact that back in the day, 300 years ago, you couldn't just plug into the grid. You actually had to generate your own electricity. That's why we saw things like windmills and coal plants, things like that popping up all over the country. Now we're in a similar situation with data center capacity. And Jeff is essentially saying this is not sustainable. It's going to have to centralize into these large-scale sites. Lo and behold, exactly what you just said, the miners are the ones with these large-scale sites. Now, if we move into the next graphic here from Goldman Sachs, we've talked about this insatiable demand for capacity for megawatts. Again, we're seeing this growth forecast out to 2030. Case in point, what you said, Anthony, there's not enough megawatts. The miners have them. AI is taking over the world, and they need to plug these chips in.
Yeah, we've seen a number of different graphs and charts to highlight the requirements, and this is no different. This is showing you at the moment, you go to 2025, around about 4.5% of the total power in the US is around data center demand. But as we go another effectively 4 years to 2030, you see that rise to 8% of the total power, and potentially in a bull case that would rise above 10, maybe 11%. So significantly higher from what we're seeing at the moment. And that's going to have to be found. And who's going to deliver that? Well, we've already anticipated that a number of the miners do have significant amounts of energy, but this is going to be a sizable amount. I mean, we've had many CEOs come on there that we've talked about Dan Roberts from IREN, and he came on and said, at the moment we're using 4 or 5 gigawatts. That needs to be 30, 40. We've seen that number go even higher into 50, 60 gigawatt range there. And that needs to be built out. So we need those data centers, we need the power. And a lot of these hyperscalers are obviously trying to do their own searches, but we have ready-made customers who can provide that. And not only can they provide the power, they've already got the expertise that have built in now into their companies to start building data centers fit for purpose as well. Remember, they've been building, sites for Bitcoin mining. A number of them have been building sites for data centers before. The likes of Core Scientific have a long-standing relationship with CoreWeave where they were building data centers. Cipher also have expertise in that area. That's why it came as no shock when they announced their deals last year with FluidStack and AWS. And so, many of these miners, will have similar expertise and great teams to support them into delivering that. And those that haven't are buying in that expertise, using ready made companies out there with the expertise and partnering up these companies to deliver that. Bitfarms being one of those, they realise that they need to buy in some of that expertise, and they've already aligned with T5 company there that are expertise in delivering these data centers. And this will continue now as we see more and more deals over this next year or two.
Yeah, you're right there. We've seen companies being purchased. We've seen partnerships and some high-profile hiring and board of director additions, which we covered in our compensation special there as well. So the stage is set, you guys. Let's start talking about some concrete examples. So we talk about this search for large-scale sites. We talk about the Rumour mill. Just last week, we covered Hut 8 on the channel. They've had an exceptional year. Victoria's Sun put out a tweet. We did confirm this, and they did have a member of the Hut 8 team on site at this meeting talking about a potential 500 megawatt, $5 billion data center in Logan County, Illinois. Now, what's interesting here is this isn't the first time we've heard rumors about this site. There was actually talks the year prior about this same site being in discussion with a partnership through Meta. So this shows a great example of how these sites, primarily non-disclosed sites, can draw a lot of interest, a lot of intention, and people really start to dig in from multiple angles.
Yeah, absolutely. And that news last year was released by the actual town where the site was, looking to get approvals, and it was never reacted to by Hut itself. They didn't come out and make any statements around it. I think it was the local mayor who made a statement, because obviously he knew a lot of the information. They were going to require people to be skills from the local community to help fill some of the jobs that were going to be required there. So from his perspective, he could see that. But this is great news in the end now that we're starting to hear more positivity in terms of the fact that something's likely to happen at this particular site here. Remember, they just announced a really big deal with FluidStack, and this is just the start for Hut. They've got some significant sites. I think in terms of pipeline, they've certainly got one of the largest pipelines of power I've seen of any of the companies, heading towards 9, maybe even 10 gigawatts of power there. And a sizable chunk of that is actually in operation, and another sizable amount is also in development stage there. So, and who's going to, the year or two they've had, and they've had a fantastic couple of years. Share price at its 52-week high at the end of last week, and everything that Asher seems to be touched at the moment seems to be turning to gold effectively.
It certainly does. And we talk about the portfolio of assets here within Hut. A great example of this, you guys, is if you go over to hut8canada.com, you can see their portfolio just in Canada. We focus so much on Texas, on the US sites. They've got 5 different locations here in Canada. You can click on any one of these, the Kelowna data center, for example, a tier 3 data center. So these portfolios, we talk about IREN in relation to Childress and Sweetwater, but a lot of times they've got other assets, primarily in BC for IREN, but that go under the radar and again lead into this speculation or this excitement in the space. Now, earlier in the conversation, Anthony, you mentioned even CEOs help lead into this speculation. We were at HC Wainwright. This is a clip from Tyler Page's presentation, and he was even setting the stage, saying he expects multiple deals by year end. This was just before Christmas or the holiday break. So you can see even leadership kind of leading into this rumor mill, so to speak.
Yes, you can. And it was interesting. He highlighted on the slide that you can see there that they had about 450 megawatts of available power with the likes of Black Pearl site and the Barber Lake site. And I just raised the question with him at that particular conference there, suggesting actually, even though they just installed 150 megawatts of mining machines at the Black Pearl site, they really had 600 megawatts on offer to a potential client. And he said, Anthony, that's very shrewd of you. And what happened then is they actually did deliver the 600 megawatts in terms of the deals they set aside there. So a little bit of a tick in the box for power analysis, but this is the same for all companies. We've looked at the fact that Childress there, we've been to the site, and you can see the fact that, it's a 750 mega site there, enormous site to go on. We've talked enough about the site size on previous podcasts, but it does have 750 megawatts. Now, at the moment, there's about 500 of that megawatts directed towards Bitcoin mining, helping them to maintain that 50 exahash of Bitcoin mining that they're having at the moment. But believe you me, that is a 750 megawatt site that will be delivering high performance compute in the next couple of years. I don't see any other reason for that. And once we get past the next halving, we've heard from a number of CEOs, it's going to be more of a challenging time for any of the miners to continue mining unless you have your own power, or unless you can produce machines that enable you with a really, really great efficiency level to mine Bitcoin at a margin if the Bitcoin price doesn't compensate for the fact that we've had difficulty and a halving. So those are the issues around the mining, and that's why we see a lot of these companies like Cipher really fully focus on delivering HPC in the future, and they'll continue to use them miners at Blackpool until they're ready to switch across and then complete the remaining refurbishment. So it does provide, in the short term, a much needed cash flow requirement. It saves them going out borrowing extra funds there if they've got miners on site and they've got a sizable hash rate there, very, very new miners. They can maybe, get some decent cash flow in, and then when the time comes to switch across and refurbish those, they can move those machines to another location. They do have a number of other sites available, and they can continue that mining whilst they're still providing a reasonable margin, and then start obviously switching their revenues on for HPC.
You're certainly right there. And we've actually seen Mike Alfred also talking about multiple deals for Cipher. Now, in the case of Cipher, these deals did come to fruition. So we'll bring up our table here that kind of compares, contrasts some of the deals we've seen landed so far. And to your earlier point, this is exactly why there's so much anticipation in 2026. We've seen a lot of these rumors come to fruition, actually be signed, inked into contract, and Cipher, a great example of that in 2025.
Absolutely. They've effectively, gone from no deals to now a total of 407 megawatts of compute deals, using up, as I explained earlier, that 600 megawatts of power available, already energized at the Barber Lake and the Black Pearl site there. That came in sort of like them deals came in the last quarter of 2025. Whilst those were going on there, we had the likes of Core Scientific, who'd already sort of like effectively got all their extensions and increased deals with CoreWeave, and that stands at 590 megawatts of compute power using 800 megawatts of total power. And TeraWulf at the same time had announced a number of deals as well with Core 42, with FluidStack, delivering 510 megawatts of compute power with slightly less total power because they're in a more cooler location. The further you travel up North America, the sort of like the lower the PUE is, because you're not having to provide that additional cooling support for the GPUs. You can see from the table the PUE for TeraWulf 126, and for the rest of them probably closer to an average of about 140 to 145. In terms of the revenues, I mean, these are all massively big deals for all these companies there. And there's not too much to separate them effectively. If you look at the revenues per megawatt per year, Hut 8, have a fantastic deal there. They were the last ones to announce a deal. And although we don't know all the ins and outs of the deal there, we do know that from a net operating income margin, apparently they're achieving 99%. So I'm just wondering where the 1%'s actually been spent on, but 99% of that $7 billion revenues there, that'll provide some good margins for the company there. The thing that everyone needs to remember is the cost to deliver these sites is not short, and we know that HUDs are going to be spending close to $9 to $11 million per megawatt. So significant expenditure. Cipher mining a similar amount, as is TeraWulf. Now, Core Scientific, it looks like they're not going to be building to the same level, and we need to just confirm that 1.5 million per megawatt. Remember, ever since the shareholders came out unanimously, effectively 9% of the shareholders voted down the deal of that potential takeover by CoreWeave. So the company really kept quiet for the last couple of months there, probably heads down, trying to get themselves together and get themselves focused on achieving the CoreWeave deal in the time frame that it's supposed to be there, and also looking for potential other clients. The last one we'll talk about really is IREN. And IREN have got they haven't gone for the co-location deal, they've gone for the CSP deal. So they're going to effectively go out there and build their facility, the tier 3 facility at the Childress there. We can see they've already sort of started a lot of the work on Horizon 1 and 2, and now started on Horizon 3 and 4. And they're going to be purchasing all the GPUs required for that facility. And at the moment, the total cost of those is about just under $6 billion. They have been given a sort of like a help towards that from Microsoft, who are going to be the client base there. They're giving them effectively 1.9 billion as a sort of like an interest-free loan that'll be paid back during the 5-year contract. Remember, this is a 5-year contract. All those other co-location deals are a minimum of 10 years and for some of them go up to 25 years. And so there's a significant amount of difference in time frame. But remember, if you're managing the GPUs, we only know at the moment the GPUs probably last about 5 years. Now, I think in IREN's situation here, they're hoping for them to last longer. Remember, once they build the site, that's going to last probably longer than 5 years. That might last 20 years. But those GPUs, we're in sort of uncertain territory. They'll hope they'll last at least 5 years and maintain the revenues over those 5 years. Anything above 5 years is effectively more gravy, more profit for IREN. So, we are seeing still people using A100s and H100s. And remember, we're so many iterations ahead of that now. We've got these GB300s coming to the market. We have the GB200s coming to the market. There's a whole load of different machines from those initial ones there, and maybe that will continue. That's going to be, from my perspective, that's going to be the issue. When you bring out more efficient machines, when do providers of these services look to then sort of like change? Remember, we saw the miners changing and updating their machines from a Bitcoin mining perspective when the likes of Bitmain or MicroBT brought a new machine to the market. A lot of the miners were going, well, that's worth us actually considering replacing a number of our less efficient machines. And we even saw the likes of IREN do a significant change on most of their fleet when they were getting to that 50 exahash. They replaced a lot of the S19s for S21s to enable them to get to that number really quickly. And they did it in record time and achieved that by June the 30th last year. So, no, interesting to see how that one goes there, but it's still a very, very profitable business for them. They're expected to achieve 85% EBITDA, so that's earnings before interest, tax, depreciation, and amortization. So all sort of like effectively the cash costs that you're going to incur. Remember, there are some non-cash costs like depreciation. You've got to pay for these machines. That's not included in that 85%. Remember, the other miners aren't paying for any GPUs. They're passing that cost to the client. They're also passing the power cost to the client as well. So this is the sort of like the challenge when you've got these two strategies. Time will tell which one turns out to be the more profitable one, but we'll keep a watchful eye on IREN.
And there was an interesting clip out from the CoreWeave CEO talking about GPU lifespan and obsolescence risk. So we'll maybe do a follow-up podcast on that next week. Now, IREN, you're talking about in quite a nice light there, Anthony. We've seen many analysts also favoring IREN right now. Bernstein came out with IREN as their top AI pick for 2026. And this is kind of the next layer. where we start to talk about, well, okay, there's rumors out there, there's speculation out there. What's been priced into the stock already? This starts to weigh into the analyst price targets. And as you can see through this clip, there's a variety of different price targets out there for IREN. Again, showing how difficult it is to really kind of weed through the noise and get an accurate target on these companies.
Absolutely. We've seen, a great deal of analyst targets. Quite surprising to see JP Morgan and Reggie Smith put it as a sell option there. I think they're one of the few to do that. The majority of targets I've seen there certainly higher than what the share price is today, around about that $49, heading towards $50 range. But I think, you look at the amount of power they have, and they've only allocated 11% of their total power at Childress and Sweetwater towards Microsoft there. This is their first deal they've announced there. They've got a significant amount of power available at Childress, and they've got 2 gigawatts of power that, majority comes online in April 2026 with the remaining 600 megawatts in April 2027. So they do have a lot of power coming on now. This isn't piece of the land with no development. This is piece of the land with power coming online in the next 15 months, 2 gigawatts of power. And I'm sure if they announce deals for those sites, you can think about buildings being built in a sort of like a timely fashion, really. I mean, look at this. Look at the way they're progressing on that shot of Childress at the moment with Horizon 1, 2, 3, and 4, and the speed it took them to put all those Bitcoin mining facilities up very, very quickly. I mean, they raced. I think the last sort of 30 exahash was achieved in the last 12 months of their construction, and so this is sort of a company like this, how they can operate. And it will come as no surprise. I mean, this is massively more than what we saw when we went to the site just in November. We were there like literally 2 months ago, and you can see the speed of what's happening now compared to then. And we'll see that speed complete Childress and then move ahead towards Sweetwater. So yeah, they do exactly what they said. So they get things done, and they just look at the amount of vehicles on that site there. You look at the car park. That just gives you an indication of how many people are on that site. There's up to 1,200 people a day on that site there, and it's just like a very, very small town. There's vehicles moving around constantly. There's pieces of equipment moving from part to part of the facility there. You go in there in the morning at 5 o'clock. There's a row of vehicles outside the facility trying to get access through security. And it goes for miles down the road. It's just one constant conveyor belt of production there at that site there. And I'm sure we'll see exactly the same when we start seeing the similar shots of Sweetwater.
I'm sure we will as well. So we've got the analysts that are putting their price predictions in. That's obviously causing some volatility, some uncertainty. We've also got the retail analysts, so to speak. We've got some of the more notable ones. Franz Baker, he's the one who just provided that satellite image you can see of Childress there. Very detailed, very knowledgeable about this company and the space. And then we've got some of the lesser known analysts, so to speak. Now, Silent Capital put out a tweet over the weekend talking about this rumor mill, specifically stating he expected Monday morning IREN to sign a deal with Anthropic. So you talk about this amount of power coming online. There's a lot of anticipation for this next big deal based on the deals we've seen inked in 2025. However, there's positive discussion about companies and there's negative discussion about companies. It's difficult to sort through. It looks like this did not come to fruition. There was no Anthropic deal this morning, but you can see based on some of these tweets from Silent Capital posting their purchase orders, the time frames, the expected price, this is exactly what causes this volatility and fluctuation so specifically and so heavily in this AI HPC space.
Well, I will say one thing, Bryce. I'm looking at the live share price of IREN now. It's $50.27. So maybe he did get one of those aspects right, because he was expecting a 10 to 15 pre-market move to $50. So we've seen that occur, albeit in market time. But yeah, I mean, it's a good move today, as we said earlier in the podcast. IREN's probably the best mover of the day so far. And I think there's, like you say, speculation. They've only given up so much of their power. Once they start announcing other clients, and the likelihood is that they'll be announcing, Microsoft, increasing their effectively their position at Childress. I can't see for the life of me another client being allowed on that site. It's very much secret stuff. What these companies do there. They don't want other people being in the area. We were only to take. We're talking about the shells of a building. We couldn't take any photographs inside, or an empty building, because of the fact that Microsoft didn't want any that they were allowed to take from a distance. We could take the outside of the building, and these were really shells. There was nothing inside whatsoever when we got there. It was just like, but you could see. Obviously, there was going to be, a lot of work to, on the inside to be completed and get them ready for that tier 3 position there. But we could take no photographs, and I don't think they'll allow other companies or other clients to come on the same facility as it is at the moment. So I fully expect. I think it's the discussions now will be like we've seen a number of other miners. They sign a deal. And then, literally not long after that, they start signing, further agreements. I mean, I think Core Scientific had 4 or 5 additional contracts, the original deal of 200 megawatts, and they came in all shapes and sizes. I think the last part of the contract was, like an extra 70 megawatts. So that it don't have to be big, but they were all extensions to the original contract. I think we'll see that with IREN here. Sweetwater might be a whole different ball game. That's not been utilised at all yet, and so that might be opportunistic for a company like Microsoft or another particular hyperscale. And there's, like you say, there's a lot of speculation from Silent about the Anthropic deal. Best bear in mind, we're only Monday at the moment. I mean, if he thought there was going to be a deal come out today, you'd likely think he had insider information. But if he thinks the likelihood of a deal, and people have been, you go back to the likes of Mike Alford, he was calling out Cipher Mining for having deals before they announced a deal, having listened to the earnings call. So people are paying close attention to that. There is a lot of information. You can go and search a lot of information. We know that because some of the social media analysts are really going to extreme lengths to find out deals about land purchases, power contracts, even before any of those are really disclosed. And so there's a lot of information out there. It's just a case of having the time, effort to source that information and then come up with your sort of like your expectations. So let's see if Silent Capital's right in the next week or so. If something comes through, I'm sure we'll re-show these tweets, because he's the one that's named it, and he's putting a lot of detail into those tweets. He's also putting, like you say, his trades as well. So he's backing his words with his cash, and we like that. We like it when CEOs put their cash into mining companies as well. Sorry, we like it when CEOs also invest some of their own cash into their companies. It gives a good feeling to the retail investors that they're prepared to see their money go in the right direction as well at the same time. So I'll re-look at these in a week or so time, see if there's any sort of updates from IREN. Yeah, a good day today for the company, up 9%.
Yeah, I'll say we'll give them the benefit of the doubt. Pretty bold statement, and yeah, definitely nailing the move in share price. So potentially we'll see after hours if there's any announcement. I'm glad you brought up the word secrecy as well. That's really another component that's fueling this rumor mill, so to speak. These deals are extremely high value. They're extremely competitive. We get a lot of transparency once the deal's done. But up until that point, upwards of 5-6 months of negotiation, these companies are airtight, as we saw with that first example of Hut 8 and Meta. So that brings us full circle in today's discussion. A lot of excitement and anticipation in the sector for 2026. Any closing thoughts there before we move on to hash rate index, Anthony?
Yeah, you mentioned a good point there. Transparency, once the deal's been signed. And I've been pretty amazed how transparent these deals have been. I mean, it leaves nothing to the imagination. And obviously, Core Scientific started. They had the first really big deal. We were there at the Denton facility for that announcement, the 200 megawatt deal there. And we listened to that presentation from Adam, and it was literally, this is just the start. And we came away from that particular visit that day thinking, wow, this is not the end of this deal. And I think we even podcasted that night, and we managed to gave I think a live Spaces update with on the Bitcoin AI channel to sort of like put the points across that we'd heard that day from the visit we had with Core Scientific, and we were very, very bullish. And, you know, from then we saw every deal in its entirety coming out there. Mine were very quick, and I was quite surprised why you would, you know, do that. Is it a case of you're trying to do one-upmanship, showing that your deals probably might be slightly better than the last deal? But what it does do is it does give the market a lot of transparency about where the expectations are for delivering. So when you see those deals, and we put that slide up of the deals that are out there at the moment, the 5 deals there, and you can see down to literally how much margins these companies are going to be making on these deals. For those companies that haven't delivered a deal yet, they have sort of like an understanding of what the potential looks like. And I suppose from their perspective, is their potential going to be, let's hold out for a bit more because we know that the power's the bottleneck. So the likes of Riot, the likes of Bitfarms, who effectively come to mind, because I think if you're going to mention companies that haven't named a contract in place, I think those two are probably high up the list. I think Riot, because of the fact that it has effectively a significant amount of power at 2 of its sites already, and you can see the development it's already done at those 2 sites. You know, these are far ahead of Sweetwater 1 and 2 in terms of, you know, delivering a contract. So it wouldn't surprise me if people are assuming that IREN are going to announce a deal for Sweetwater. I'd be anticipating, you know, Riot announce one just as quickly for the likes of Corsicana and even the likes of Rockdale. You know, those 2 sites have a total of 1.7 gigawatts of power, which is getting close to the size of what we've seen at Sweetwater there. But they're in a far better position in terms of the fact that they have all the things that tick the boxes. They have the water, they have the fiber, they have the location. We keep talking about locations key. Those 2 sites are between the likes of Dallas and Austin. And so, you know, the expectation as we move into 2026 is hopefully Jason and the team, and they've got a really good team. We got to meet them in November at the visit to Corsicana, are going to be announcing some sort of a deal in the very, very near future. And the same with Ben Gagnon and his team at Bitfarms as well. They're in the middle of hyperscale country, and we've heard big updates even today suggesting that there's hyperscalers in there have just managed to acquire another couple of gigawatts of power over the next sort of, that's going to be available in the next sort of 18 months to 2 years. Well, we know that Panther Creek and Scrubgrass are 2 sites that Bitfarms have up there, and they've got power there, and they can be effectively, you know, changed very, very quickly to meet the requirements of a hyperscaler or a neo cloud. And surely we'll hear an announcement from them as well. So that's my views on what we've talked about today on the rumor mill. I expect a few more announcements in this early part of the year.
Yeah, I do too. It'll be interesting to see how this all plays out, but very exciting to say the least. Now, in terms of speculation, Miner Madness 5.0 now up and live on the website, both the analyst leaderboard and regular leaderboard. This shows exactly how exciting this sector is. Some contestants now up 20, 30, 35% just in the first few days of trading in Q1. So case in point, this is what brings people to the space. This is the excitement that keeps us going, and really why we're able to weather this rumor mill, so to speak, or the volatility that we're known for here. Now, the final point, Anthony, Luxor Hash Rate Index. This is another nice benchmark we like to look at on a regular basis. Really paints the picture for why these miners are moving to HPC AI at such an aggressive rate.
Yes, absolutely. I mean, this is the challenge that the Bitcoin miners are facing on a sort of like a daily basis. The hash price at the moment below $39. You know, go back to pre-halving, it was $110 a petahash per day. This is a significant drop. This is nearly a third of that now, and the challenge is really there when you're only getting a third of the rewards and you've still got the same level of costs, unless you've managed to change your fleet for a more efficient fleet, and to do that costs an excessive amount of funding. There's been no respite really. It's over 1,000 exahash. It's 1,023 today, and as I say, this is a challenge. Now the network difficulty, which is due to go down on the 22nd of January, So just over 10 days time, it's showing a reduction of 2.4%. Again, anything that brings the difficulty down is a blessing for miners, because it means that their production gets slightly increased, means that their margins are slightly increased. But the challenge is now at these prices here, what sort of efficiency and power cost have you got to be using to actually achieve a margin? I would suggest there's not many miners out there. There's a couple to mine that probably are making sufficient margins to cover all the costs, but the vast majority will probably be holding towards break even. But the optimism is, I suppose, if you're hodling Bitcoin, that the price of Bitcoin will rally in 2026 and enable you to get back some of those margins in terms of increased valuation.
Optimism is a good way to end the podcast there. Optimism, speculation, and the excitement going on in the sector. Let us know your thoughts below. Who do you think will be next to sign a big deal? And are you expecting to hear anything from IREN this week? If you're still watching, hit the like button. Feel free to subscribe, and we'll see you back here tomorrow.